A very good morning, good afternoon, and good evening to all our visitors and delegates who have joined us from different parts of the world. We once again welcome you to the second edition of the International Citizenship Talk. Today it's going to be an interesting day. We have a very interesting guest with us. But before that, we are very excited to have you with us for this special session, which is presented by the Pall Mall Investments International. Whether you are here to explore innovative investment strategies, gain insights into the financial market, or learn more about the Pall Mall's unique approach, we are confident that you will find this webinar both valuable and engaging. The main categories they serve are business strategies advisors, financial strategy advisors, business restructuring, mergers and acquisitions, capital restructuring, capital raising through equity or debt, and business mentoring and monitoring. Pall Mall Investments International is a leading investment firm with a strong focus on investors such as private equity, institutional investors, hedge funds, family offices, and high net worth individuals. With years of experience and a team of experts dedicated to deliver exceptional results, Pall Mall has built a reputation for offering tailored investment solutions to help their clients to grow their wealth and achieve their financial goals. Please leave all your questions in the comments below, and we shall definitely get back to you at the earliest. Last but not the least, as we always say, and it's very cliche, that please practice your due diligence before making any kind of investment decisions. We always suggest that this particular series of webinars we do are mainly for educational purpose, and we always advise you to kindly invest your money wisely. So without wasting much of time, let's get started. We have with us the CEO of Pall Mall Investments International, Mr. Ben Armstrong. Mr. Ben, welcome.
Hi, Mayank, and delighted to be joining you today.
It's a pleasure. Before we start, I would like to inform my esteemed subscribers that Ben and me have a long history. I got the opportunity to work under Ben in 2008, 9, 10, 11, 12, 13, 14. So that's a long time that I have served under him, and it's absolutely amazing to get in touch with him again and start a new discussion with Pall Mall Investments. So without wasting much of time, I would like Ben, you to kindly inform us what exactly are the services that Pall Mall Investments offer, and what are the key sectors that you are focusing on.
Thanks, Mayank. Well, I think the key sectors we are focusing on, although it's relatively broad, the ones we're focusing on particularly carefully at the moment are foreign direct investment, so investment coming into the UK from investors who are looking for opportunities across sectors. So we're what's called sector agnostic. We work in about 25 different sectors of industry. Now, whilst that means that we don't necessarily have huge knowledge in each individual sector, it means we're broad and can find the better opportunities in that whole area, that whole arena, which I think is more important at the moment. I think the way we're doing that is through a number of channels coming into the UK. One of them is obviously through the various business visas that allow individuals to come and live here in the UK, along with their investment. Others is just through investors who are looking for remote investment opportunities, but think that the UK is where they'd like to place some of their investment portfolio at this particular time.
Interesting. So honestly, Ben, there are plenty of such organizations which offer the investment solutions. How do you set yourself apart from them? How do people normally feel that this is the genuine way to go with? This is a genuine firm to basically do the investments with. What sets you apart from the other people who are already existing in the market?
Yeah, I mean, I think that, of course, there are lots of other organizations that do in part what we might do and understand the area that we operate in. I think what tends to set us apart is we're not trying to be the biggest. We want to be the best, but not necessarily the biggest. So we're boutique in that sense. We have spent at least 15 to 20 years building up reputation, building up relationships with organizations here in the UK that we partner with on a regular basis. And I think in part, the main reason those organizations who will be brand names, will be global entities, are happy to establish and partner with us is because they recognize that we are trying to operate with integrity, and with candor, so that actually at the end of each opportunity, we're looking at what's in the best interest of the individual client.
That's very interesting to know. And specifically, when we talk about the investments and funding services, uh, how does Pall Mall Investment supports businesses in raising capital, and what type of investors do you normally work with? Of course, I've listed a few when we started this particular session, but we would like to hear from you as well.
Yeah, I mean, I think there are different ways of companies raising capital. It can be debt or equity. We tend to look at more equity opportunities than debt, but that doesn't preclude the debt option as well. It depends on the investment they're looking at. It depends on the appetite of the investor and how they normally like to invest into opportunities. And I think that our whole business model is set up to be continually looking for what I'd call off-market investment ideas or opportunities. The point being that these are not opportunities that you would easily necessarily find by reading the Financial Times or by reading other financial papers or going online, for example. So we hope that what we'll introduce our investors to is opportunities which they ordinarily wouldn't come across. They are individually strong opportunities which will hopefully lead to an investment which they're happy with and give us the kind of returns that they're looking for. But I think in many ways it's all about understanding the needs of both the investor and the company that they're going to invest into, and how we need to align that. So different investors will have different models, different ideas, different strategies to what they're looking for and what they're looking for as a return. So if we can get a firm understanding of what that investor is normally looking for, we can then try and match that with appropriate investment opportunities.
Absolutely, absolutely. That does make a lot of sense. And specifically for any business rather, when they try to secure investments, it's a big challenge. So, can you, I mean, give some reasonable challenges and how normally you overcome them?
I think from a company who's going out to market to raise the capital, there are a number of challenges that come from that. And I think in many ways that the most important aspect of this is to make sure that from their perspective they're getting the deal that's right for them. So they're not taking any investment at the wrong price. They're taking the investment at the right price. So they're not selling themselves too cheaply, and they're not getting into a deal that in 2 or 3 or 5 years' time they may look back on and regret selling 10% equity for only 2 million when actually they probably should have sold it at 4 million. And I think that's terribly important from a company's perspective, especially when they're starting that journey of raising the initial capital to get the business properly off the runway. And I think first and foremost, don't be too quick to take the first deal or first offer on the table. And secondly, obviously, it's always important and attractive to get a cornerstone investor into the business who you can then demonstrate you've already got your investor on board or an investor on board who's invested 25% of the requirement. And that gives confidence to other investors who are looking at the opportunity as well. So it can become, that kind of chicken and egg situation, which comes first. But the idea of getting that cornerstone investor at the right price that keeps them happy and that keeps you happy is terribly important. And I come back to that point that you don't want to be living with regret. You don't want to be feeling in a year's time that you've undersold yourself and basically you've given something away for a price that's a good deal for the investor, but not such a great deal for the company.
Mm-hmm. Absolutely. I think that's one of the common mistakes people normally do. They try to explore the opportunities more than which is required, and then ultimately they fall into the pit of their own grave itself. So I think one needs to be very focused while actually searching for right kind of investment opportunities as well. So great. Now, I mean, there is one big opportunity, which is, of course, we talk about is the business growth and strategic advices that you offer. So specifically, what role does the Pall Mall Members Club play in supporting business leaders and executives?
I think what we're trying to do in the Pall Mall Members Club is simply help the business stay on track, keep it going in the right direction, and make sure that it's aware of all the issues and problems coming up that a business is going to face from time to time. And there's a cliche here in the UK, which is that a ship in the harbour is safe, but that's not what it was built for. So we're not planning on working with companies that are safe and are not growing and not developing and not expanding. We're working with companies that are actually getting out there and taking those risks and taking those, going through the problems that they will inevitably come up against. But at the same time, helping them to, if I can go back to that cliche, but helping them to navigate the rougher seas and getting them through that. And that's through a number of elements of whether that's through us helping them find professional connections which they need and require, depending on the particular issue problem they're coming up against. If we don't have that in-house knowledge, we will introduce them to experts that can. It'll be continually assessing the progress of the business versus their original business plan. We all know that a business plan is essentially out of date the moment it's been written, but at the same time, it's also a good steer or a good map to where the business is meant to be going by month 6, month 12, month 18, month 24, and so on and so forth. So to be able to refer back to that from time to time and to see the progress as business has made versus against what it is forecast to make is very important. And to understand the differences, the reasons it hasn't quite hit this target or it has overachieved in this particular area, and to understand why. And I think we carry on continually assessing that and trying to help the company recognize and see the wood from the trees, so they have a clear understanding of how their business is actually performing versus how they'd forecast it was going to perform.
Interesting. So anybody can become a member, of you have certain criteria for people who can actually become members of the Pall Mall member group?
Well, I think essentially we're open to wide variety of members and cross sector. As I said earlier, we work in around about 26 different sectors of industry, so we are broad in that sense. We would actually assess an individual application to determine that we share enough of the right similar thoughts and same ideas, and also believe that we can help the company in question. There is very little point, and it will lead to what we want is not a short-term relationship. We're looking to build long-term relationships. So I think it's important for us to recognize that there's a strong enough chemistry between us and between the company, and to demonstrate that they feel they're going to get genuine value for money and that we can then deliver that. So we build a long-term relationship with them, not just as an advisor giving input on a quarterly or a biannual basis, but also possibly looking at further opportunities, getting closer to that company, then helping them go to market to raise capital when the time is right, becoming a non-executive director on their board, if that is also what the business needs and what the business requires, depending on the timing and depending on where they are at that particular and precise moment in time.
Interesting. Great. So from that per se, specifically, the market is very dynamic, and we have seen that whether it's any part of this globe, there are a lot of challenges one needs to face. So how do you assist in business continuity planning and crisis management?
Well, I think when you're looking at that side of things, it's a little bit like insurance. Quite often people don't necessarily want insurance, but they're always glad they've got it when the problem happens, and they can then make a claim on that insurance. But it's helping companies understand the necessity for that and the benefit that can come from the correct planning. And the need for that kind of support is pretty broad and quite varied. But I think that it's trying to help a company understand what I would call the what if scenarios. So that what if this problem happens? What if that problem happens? What if your key member of staff leaves the organization with no notice? What happens if your key supplier suddenly stops supplying with no notice? All these scenarios can be mapped out, so you have an immediate fallback, a plan that you can put in place and initiate that without the business hemorrhaging money and without it spending month upon month trying to find a solution to put into place which already would have been put in place had they gone through the planning phases. So it can be seen as an unnecessary expense, but for every business I've ever worked with who have this in place, the moment they need it, they realize it's true value to their business.
Interesting, interesting. So let's take an example. So say, for example, that I have a company in UK, and I am looking to raise investments. Now, I'll come to Pall Mall Investments and say that, hey, I am actually looking for investments, and can you help me out? So, what are the common ways that you can assist me? One, and of course, what are the common mistakes which you have seen a lot of people who are seeking investments make while, while of course seeking their investment, they do a lot of mistakes. How can they avoid them?
I think the what we need to understand from the company in question is first of all what they're looking for, the amount they're looking for, and also to understand clearly why they're looking for it, in terms of what they need that investment for, what it's going to be used against, and clearly have an understanding of what the valuation is they've given to their business. Now, anyone can give a valuation to their business. And in fact, if you ask 10 different accountants to value a business, you'll get 10 different answers and 10 different valuations. But it's basically having the understanding behind that valuation. So whatever the number might be, whether the business is worth 5 million or 10 million or 20 million, is kind of irrelevant. It's more important is the logic that's been applied to get that valuation so that they can robustly defend their value. And I think that the worst case scenario you can possibly have is a situation whereby a company makes a determination their business is worth 5 million. They are then challenged by the investor who says, well, actually, I think it's worth, 3 million. They then choose to accept his understanding of that. They end up taking that investment. They will then regret that for sure. On the basis that they believed in their initial investment, they need to stick to that and to be able to defend it. So we'll challenge whatever valuation they give us and explain the company is worth. We'll challenge that first of all. We'll really break that number down to make sure that they understand the numbers more than anything else and to understand how they're going to justify that number. Because what we don't want to do is to take a company, put them in front of investors, the investor to challenge that, which they naturally will, because it doesn't mean to say they're looking for a better price, but they actually just want to make sure they understand why they value the business at the number they have. And actually what we don't want to see is a company crumble and say, walk away with, well, we're happy to get you on board. We'll give you a 30% discount. That doesn't work. And it doesn't help your case when you're trying to raise capital going forward.
Mm-hmm. That's pretty interesting. Actually, your stakes are high on both the places in terms of the investors as well as the person who's seeking investments. So it has to be more balanced approach when it comes to, in fact, getting the right kind of people on board. Great.
I think so.
Now, yeah, go ahead.
I was going to say that I think that the point I would add is that it's also important for the company to understand if they want a particular kind of investor. And it's always better to have an investor that understands their sector, because by understanding their sector, you're going to have someone that can actually value add to the business, not just in terms of the investment, but actually through connectivity, through networks, through understanding how the business is fully operating, so that when you come back to give your investors an update, they'll appreciate more the problems you're inevitably having, because that's going to happen in the long run. And you get a much more sympathetic ear to someone that understands the sector from one that just came in, liked the idea of it, invested their money and expected the returns. Now, if the returns don't necessarily happen when you thought they might, an understanding investor will be more tolerant of that than one that is naive and doesn't understand the sector at all.
Absolutely. Well explained, I must say. Moving forward, another important aspect, which is the R&D tax credit and government funding. So before we take the questions on this segment, we would like you to explain what exactly is R&D tax credit. What does exactly it means? Because a lot of people have these queries, and it'll be great if you can answer that.
Very simply, these are tax credits that you can claim back research and development tax credits you can claim back from the government, depending on making sure that the business itself has applied itself correctly on an R&D tax credit format. Now, I think if we went back 10 years, 15 years, this was a lot more straightforward, and consequently what's happened over the last few years is the government have made it a lot harder to apply successfully for tax credits. It's also created a situation where they can grant them and then decide later they want to take them back retrospectively, which can create all sorts of immediate cash flow problems to a company that's been given a tax credit of, let's say, £100,000, and is then the government turn around in 6 months' time and say, well, actually, we've made a determination that this wasn't quite what we thought. We want that back. And that they can do. So it's very important from our point of view to make sure that if these are applied for, that they're granted, and there's going to be no comeback on that. So we don't do these directly. We refer on to experts who are proven experts in this sector that we have known and worked with for many years, and they can give us support. Now, what they will tend to do, because they obviously want to work with companies who are going to be successful in that application, so they will have a review of the individual case, the individual company, and the sector they're operating in, and they will make a determination before anything happens whether or not they think this particular company has a strong enough case for an R&D tax claim. And at that point, they will then walk them through the entire process from beginning to end and help them with that particular journey.
Fantastic. I think that's very well answered again, because the next question I was supposed to ask you, that what are the typical benefits? And I think you have already covered most of them in this particular answer as well. So we got the point. I mean, normally the R&D tax credits could be 100% as well, or there are certain percentage attached to it.
I think it's on a case by case basis, basically, and all that information will be determined when the assessment's been looked at before the application will go in.
Okay, got it. So next is a more futuristic question that I'm going to ask you about the investment trends and market insights. So what investment trends are you seeing in 2025, and how should business adapt?
I think that's the $64 million question, really, in terms of where people should be investing, which sectors. Obviously, it goes without saying that AI is attracting a lot of attention at the moment. And I think there's always a problem with that, in a sense that one could argue that tech, had it, the last sort of 5 years has been particularly popular, whether that's med tech, ed tech, fintech. A lot of poor investments were made on the basis that something was tech orientated, and people believe that therefore if it's tech, it's got to work and it's got to succeed, and I'm going to get a 10x return on my investment. Now, unfortunately, that's not always the case, and very rarely is it the actual case. And what we saw over the last 5 years is lots of investments that went into tech that just didn't work. It never ended up working. A lot of money was spent on it, but it failed, and consequently, the overall investment failed. So I think that the trend at the moment is definitely AI, but what one needs to be wary of is that because something is AI orientated does not mean or guarantee that it's going to succeed. In fact, it's probably more likely than not going to fail. But I think there are a lot of companies out there who are building AI products in the expectation and belief they'll get the backing, and they will get a lot of backing, I'm sure, but it doesn't mean to say it's going to succeed. So we take a view that we're not necessarily going to follow a trend like that. We will look at AI opportunities for sure, but we're more interested in a spread of investment ideas and options that can actually give someone an area they can invest into, which they feel comfortable in. And it goes back to my point earlier, which talked about investors who understand the sector have a better chance of A, investing, and B, value adding to that investment within that company. So we are more bespoke in terms of operating around what the investors are looking for and identifying then the kind of companies they may well be interested in looking at. We have an ongoing portfolio of approximately 85 companies across, at the moment, across about 16 sectors. I mentioned that we worked across 25, which we have, but we currently in our portfolio have approximately 16 sectors represented. So we can identify and match very quickly an investor to an investment opportunity, depending on what that is. If we meet an investor that has actually particular areas that we don't have represented at the moment, we can go and we'll spend time researching that and identifying through our network opportunities which will be of interest to them, we're sure.
Okay, that's interesting. So moving forward, I think specifically we can't say that there is any particular specific sector or place where we can do a safe investment. There is nothing as called a safe investment, right? I mean, it's totally your luck, and it's totally about the market-driven situations, I believe.
Well, hopefully it's not just luck, but I think it's more down to people will look at a tech business because they feel quite rightly potentially that there's more unicorn activity going on in the tech sector than anywhere else in the world, any other sector for sure. So your return, if that works, is likely to be 20x, 30x, 40x, and that could be a huge return if it works. But it's still subject to all the same issues that any other company may be subject to. But a lot more money might be pumped into that company to begin with. It doesn't mean to say it's going to still necessarily get off the runway. Even if it's had 5, 10, 15, 20, 25 million invested into it, doesn't mean to say it's going to take off. So we'll still apply the same principles to any business that we look at in terms of whether or not we think it's exciting. We look at the strength of the team. We look at the strength of the overall idea. We look at the idea behind the founders. And when I talk about the strength of the team, I always think it's interesting to look at the CEO, the founder of that business, because more often than not, you kind of want to work with founders who have done this before and succeeded before, because the likelihood is that they may have well succeeded before, but they probably also failed before. And having done that, they've learned. And they've got experiences which a new founder won't necessarily have. He or she will certainly have lots of enthusiasm and be able to talk about their product, comprehensively. But they don't have some of the same experiences that go before, and so can't therefore manage the expectations of the investors in the same way an experienced founder may well be able to do. So we tend to look at that as it is not always possible, and we may look at the team, and if they don't have the experience but we like them anyway, and we like the product and we like the sector and we're particularly excited by it, then we will still work with them. But it's just useful to have that supporting information behind them.
Absolutely. And last but not the least, what are your final thoughts and advice for startups and SMEs who are actually planning to raise up investments from the market?
I think most importantly is know your numbers, understand the figures that you're putting down on paper. So build a business plan that makes sense, that you're prepared to stand up and talk about and can confidently defend. Have your forecast figures, your projections for the next, let's say, 2 or 3 years. I mean, I think 3 years is pretty hopeful. Nobody really believes what they see in the third year anyway. And maybe year 2, even the same for year 2. But year 1 is very important. Let's see what the year 1 figures look like. And let's make sure that you understand those numbers completely from top to bottom. So when someone challenges why you're spending X amount on telecoms, or why you're spending £30,000 in the next quarter on social media, you will be able to defend that, because you will understand exactly what that number comprises of and why you've allocated that kind of budgeting to it. But be comfortable, be confident with those numbers, so that somebody you're talking to feels that you fully understand them. You're fully confident with them. You don't need to go away and check. You don't need to go away and talk to your accountant. You understand the numbers, and you understand why those numbers make sense and ultimately lead to that business being profitable and a solid investment in the future.
Interesting. I think we have answered almost all the questions that was pretty necessary when it comes to getting the right kind of knowledge for investments. But of course, I mean, any entrepreneur or any businessman who's looking for investments, how should they get in touch with you? What's the
Well,
best
they
way
can
they can?
sure they can come back to us directly on my go to our website, which I'm sure you'll be able to furnish the details to them with the end of this,
It's already
or
mentioned on our
directly.
just above our ticker as well. So it's Pall Mall Investments,
Beautiful.
pallmallinvestments.co.uk. It's
There
already
we
present there.
go. So they can contact us directly there, and we're more than happy to take on any inquiries or any contact. And if people are interested in just having a sort of a consultation to discuss their situation, and that situation may range from they're looking to start a business in the UK, they're looking for the appropriate visa to support that, we can help them with that. If they're looking to invest in a business in the UK across 20 odd sectors, 25 sectors, we can help them look and identify that. So there are a variety of sectors we'll be able to help them with. And a lot of that will start with an initial conversation. And from that, we can then build a relationship, build an understanding, and see how we are best suited to help that particular scenario in that particular case.
Fantastic. So before we close, Ben, a quick question. Can you give any success story which you have actually dealt with very recently so that it will be like a case study for our people who are actually watching us right now?
A success, well, we've had several in a sense that if I try and give two examples, one is an individual that invested in a medtech business in going back to 2017. They invested, I think, at the total of 250,000 sterling, and they have recently exited with 1.2 million. So that was as of December 2024. So that was a pretty exciting earnout opportunity. And they did that through a trade sale. So the company in question sold to a much bigger pharmaceutical business. And obviously everyone was delighted and everyone was happy. Another example would be probably, I suppose, on the other side of it is an individual that has come to the UK under the Innovator visa route, who we endorsed, we supported, and have helped along their journey. And obviously they're a much younger business than my first example, but we've helped them. They have now raised successfully, I think it's £350,000 into their initial business. So that is a payoff that will happen, but not for probably another 5 years, I'd imagine, in terms of when they're looking at their potential exits and potential opportunities. But the key to that is that they're on the other side of the fence. So they're building a business here in the UK. They're growing it consistently. They've been doing that now so they're now into year 3, and they're at a point already pre-revenue where they've already managed to attract investment, which is pretty exciting and demonstrates that we know the right people to talk to and can identify the right people to put in front of them, and that they've got the right offering. They've got the right business at the right time at the right place.
Fantastic. So all of you subscribers who are watching us right now, so you know whom you should get in touch with for any kind of investment queries that you have. And we hope and we believe that through this particular session, we definitely have added some knowledge and value to your way of working and your business as well. So do not forget to like, subscribe, and share the videos as much as you can so that people who are in need for such advices can get the right information. And once again, I would say, please do your due diligence before making any kind of investment decisions. Ultimately, it's your hard-earned money which needs to be given the right kind of reward as well. So once again, thank you so much, Ben, for being with us, and we really look forward to working with you for a long term, and we look forward to seeing you very soon.
Absolute pleasure, Mayank. Thank you for organising this today, and we look forward to many more years to come.
Thank you, Ben. Thank you. Take care. Yes. Bye bye.
Bye bye.